Global markets are bracing for a major financial showdown between the United States and Japan, as Tokyo's reduction in U.S. Treasury bond holdings sends shockwaves through Washington. This development comes amid an intensifying trade war, particularly centered on electric vehicles, that's reshaping international commerce. The Japanese Finance Ministry's March 1, 2025 statement suggesting investment diversification has been interpreted as a warning shot across America's economic bow. The U.S. Treasury Secretary emphasized the importance of trust between allies in response. Japan's position as one of the largest foreign holders of U.S. Treasury bonds makes it a crucial financier of American public debt. Recent tensions over U.S. tariffs on Japanese electric vehicles have pushed Japan to consider using its financial leverage. The automotive sector has become the flashpoint in this economic confrontation. Japanese giants Toyota, Nissan, and Honda face increasing pressure from U.S. protectionist measures. Washington's push to accelerate domestic electric vehicle production through tariffs has created what many see as an unfair competitive environment. Japanese officials have been sending clear signals. If the U.S. maintains its protectionist stance, Japan might reconsider its Treasury holdings. This threat has not gone unnoticed in Washington, with American media warning about potential impacts on the dollar's global standing. Donald Trump's previous success in getting Canada to yield to trade pressures may have influenced current U.S. strategy. However, Japan's position as a major economic power with significant financial leverage makes this situation different. Market analysts are watching closely as the Dow Jones shows sensitivity to these developments. The situation raises questions about global financial system stability and international trade relations. As one market expert noted, this is a market that is sick and tired of the trade policy back and forth. In a dramatic escalation of economic tensions between the United States and Japan, Tokyo's financial authorities are threatening Washington over protective tariffs. The situation could reshape global financial markets and challenge the dollar's supremacy. Japan's finance minister warns, if unilateral sanctions persist, particularly in the electric vehicle sector, Japan might deploy its nuclear option, selling off U.S. Treasury bonds. With hundreds of billions in U.S. debt holdings, even a minor sell-off could send shockwaves through global markets. This isn't just about cars anymore, says Dr. James Henderson, international economics professor at Stanford University. We're watching a high-stakes game of economic chicken between two global powerhouses. The conflict stems from Washington's aggressive protectionist measures aimed at shielding American manufacturers from Japanese competition. Japan's technological edge in electric vehicles has become a particular point of contention as the U.S. struggles to catch up in the green economy race. The Bank of Japan's governor stated, "Our policy isn't aimed at unilateral reserve draining, but we won't remain passive in trade disputes." This diplomatic language masks a potentially seismic shift in Asian economic dynamics. Chinese media has begun celebrating Japan's brave stance against the dollar, while South Korea watches closely. The situation has created an unexpected alignment of Asian economic interests. Market analysts point to the Japanese yen's recent depreciation against the dollar as another factor. Tokyo's traditionally cautious approach might be giving way to more aggressive strategies. The Biden administration faces a choice: maintain protective tariffs and risk financial market turbulence, or negotiate with Japan to preserve strategic alliances. Either way, the outcome could redefine Pacific trade relations for decades to come. In a significant shift rattling global markets, Japan's economic moves against the United States are intensifying as the Japanese yen faces pressure against the dollar. Financial analysts report a decline from 93 cents per 100 yen in 2020 to a projected 85 cents by 2025, marking a turning point in U.S.-Japan relations. Japan's economy is grappling with pressures from rising import costs and inflation due to the weakening yen. They're wielding their financial muscle through strategic management of U.S. Treasury bonds, responding to record-high interest rates that peaked at 4.3% in late 2023. Japan's traditional role as a major U.S. bond investor is undergoing transformation. The Department of Commerce states that trade disputes between allies can be resolved through dialogue, but there's more beneath the surface. The automotive sector has become the battlefield. Japanese manufacturers like Toyota, Nissan, and Honda have been pushing boundaries with innovative electric and hydrogen-powered vehicles, facing pushback from U.S. protectionist policies. Japan might be using its massive bond holdings as leverage to force better trade terms, particularly regarding electric vehicle restrictions. Any significant Japanese bond sell-off could create dollar fluctuations affecting the U.S. economy. While the U.S. struggles with inflation and growth targets, Japan's financial maneuvers add complexity. The question is whether these economic tensions might affect the security alliance between the nations. While immediate damage to military ties seems unlikely, experts warn that prolonged trade disputes could strain diplomatic relations. Both sides are locked in mutual accusations and strategic posturing. The outcome could range from a new free trade agreement to continued market tensions, with global implications for currency markets and international trade relations. In a dramatic shift reshaping global economic dynamics, Japan is taking bold steps to challenge U.S. dominance in financial markets and the electric vehicle industry. This development signals a transformation in the alliance between these economic powerhouses. At a closed-door meeting, Japan's automotive leaders called for aggressive government support to counter U.S. trade barriers. The Japanese government's response was clear. They'll leverage their influence in global financial markets through their massive U.S. Treasury bond holdings. Japan is acting more like a rival power than a friendly ally, warned U.S. senators in a joint statement, highlighting growing tensions. This friction has intensified as Japan begins testing the waters with bond sales worth $10 billion, seen as a warning shot to Washington. Japanese experts suggest Washington will need to compromise, citing the dollar system's fragility. The U.S. can't afford to lose a major bond buyer like Japan without serious consequences, explains Dr. Hiroshi Tanaka, a Tokyo economist. The stakes are high in the electric vehicle sector, where both nations vie for leadership. U.S. protectionist policies have pushed Japan toward financial weapon diplomacy. This mirrors moves by other powers. Russia has distanced itself from U.S. financial instruments, while China adjusts its bond holdings. Japan's action could trigger broader shifts in global financial patterns. The consequences could be significant. Japanese bond sales could increase U.S. borrowing costs and fuel inflation. However, this strategy risks hurting Japanese exports through a weaker dollar. Observers suggest this confrontation marks a new era in international trade, where financial leverage intertwines with industrial policy. The outcome of this strategic game between Japan and the U.S. could reshape global economic cooperation for years ahead. Good evening, viewers. Today we're diving into a critical development that could reshape the global financial landscape. The ongoing tension between Japan and the United States over electric vehicle tariffs has taken an unexpected turn, potentially threatening the dollar's dominance in world markets. Japan's reduction of U.S. Treasury bonds has sparked debate about the future of international trade relations. This isn't just about cars. We're watching a financial chess game unfold between two economic powerhouses. China, holding massive U.S. Treasury bonds and commanding the world's largest electric vehicle market, is watching Japan's moves. If Tokyo's strategy proves effective, we could see Beijing and other Asian nations following suit, using their bond holdings as leverage against Washington. The European Union finds itself in a unique position. While sharing Japan's concerns about U.S. protectionism in the electric vehicle sector, European nations lack the same financial leverage through treasury bonds. They're pursuing diplomatic channels. But if Japan's approach succeeds, we might see a shift in how Europe handles trade disputes. For Americans, the implications could be far-reaching. The potential weakening of the dollar's global position would affect everything from retirement savings to imported goods costs. Developing nations are particularly vulnerable. Currencies like the Turkish lira, Brazilian real, and Indian rupee could face increased volatility. However, there's a silver lining. Japan's measured bond sales suggest a careful approach rather than an aggressive financial assault. Washington appears to recognize the need for compromise. What we're witnessing could be either the opening moves of a broader financial confrontation or simply Tokyo's tactical maneuver to strengthen its position. The outcome will likely influence global trade patterns for years. Remember, these developments affect not just Wall Street, but Main Street too. Stay tuned as we monitor this evolving situation. For updates, subscribe to our channel. Share your thoughts below.